Welcome back. Hope you're having a good morning. Well, as promised, Dipan Mehta, Director Elixir Equities, joins us on the show. Hi, Dipan. Good morning. Good to see you. Well, what do you make of L&T's numbers? That's the big boy that will be reacting. The commentary, it appears fairly okay. Your take?
Good morning, Nigel, and thank you for having me on your show. Most impressed with the order book position and the order inflow, and that remains consistently higher than what they have built in the quarter and the year, which means the growth for the next few quarters and years also will be very strong. Also, I think the diversity which is coming through the orders, not just geographical, but also the type of orders does suggest that they'll be able to maintain or slightly improve their margins as well. I know the stock is expensive, but it's a complicated company because of so many subsidiaries. But net, I think that if you just value based on its EPC division, this stock can at least be a market performer. The only fly in the ointment could be the election results. If there is some disappointment over there, then the sentiment in the infrastructure stocks can get knocked for a few trading sessions, maybe a quarter or so. But the underlying growth momentum, I don't think will change. It's just that you could have a sell-off in infrastructure if there's a slight disappointment as far as election numbers are concerned.
Dipan, hi, morning. More earnings, lots of earnings to discuss. But I just want to ask you about this gold finance companies. Ritu, I don't know if you heard, Ritu was she accessed that letter which the RBI sent across to some of the gold finance companies, especially in down south, where of course gold finance is big business, Muthoot, Manappuram, etc. They all come from there. And they're saying that IT rules say you can't disburse in cash over 20,000 rupees. But that was kind of common practice. I remember speaking, I asked this question to the Muthoot management. At that point, they said, well, yeah, it happens. And we are making a representation to the RBI for them to actually give us some leeway. But obviously that has not happened because the RBI is now telling them that you have to follow the rules. And the IT rules are what they are. So just your thoughts. Will this be a bit of a disruption? And what's your view here?
Good morning, Prashant. First of all, I think RBI is doing a commendable job trying to, make sure the system is in place, and it's rightly so. They are strict with all the entities they regulate because you don't want a problem situation a few quarters or few years down the line, which can derail this multi-year, multi-decade bull market. So from that point of view, they're doing a great job. And if this rule has to come into place, it will only make the entire lending system cleaner, and in a way reduce the cost also for the gold financing companies because less cash handling would be there, and improve the quality of the borrowers as well. So I think it's perfectly fine. It may have a marginal sentimental effect, but what's really driving the gold loan companies is the rising price of gold, which means that there's a lot more leeway for these companies to lend to their existing borrowers. And we all know that household debt is gradually inching up year after year, quarter after quarter. And with gold prices going up, that certainly is going to benefit this particular trend. So it would mean that their loan book could grow pretty much decently. And I think even despite liquidity constraints, if you look at the last 2-3 quarters, the gold loan companies have been able to maintain their net interest margins. And with IIFL slightly out of the picture, or rather out of the picture, I think the competitive intensity may have reduced slightly.
All right, Dipan, just stay on. We'll have lots more questions for you, lots of stocks and earnings to talk about. But we have to address one of
more than welcome. I think Dipan is with us. Dipan, from the earnings, the slew of earnings that we've got overnight, anything L&T, of course, we spoke about, but anything else you want to talk about? TVS Motor, for example. I'm not sure Tata Power there is anything to do really. Piramal Enterprises, there's been a bit of a disappointment. What else? I mean, anything catches your attention?
Yeah, Prashant, Pidilite I thought came with a good set of numbers and very positive commentary, but Street perhaps did not like it, so I find that a bit surprising. And also Tata Power being how complex the way it is, it just continues to disappoint. And I know it's a great play on renewable energy, and that's where they're focusing on, not only in terms of power capacity, but also EPC projects over there. But some of the stock does tend to disappoint from time to time. But I thought Pidilite came with a good set of numbers, and yet the street was a bit disappointed. But on the whole, the earnings season has been a mixed bag. You cannot really say that it's a fantastic earnings season. And few sectors have done well. Of course, auto has done exceptionally well. But then the base effect will come into play next year, and that should perhaps slow down the volume growth.
Okay, all right, Dipan, hold that thought for the time being. Let's slip into a
That it could be an opening on slightly on the lower side, but let's wait for it to settle right on the 150-point cut on the index. That's that's the first take. Yeah, that's what we've got going. So let's wait for it to settle, because I don't think we're right now the rates are all over the place. That cut is because of HDFC Bank suddenly opening down in the pre-open. But anyway, Dipan, another stock to focus on is BSE. Now we know that numbers have been a little lackluster. Plus, there's that additional provision, some 130 odd crores, because of the higher exchange fee that they'll now have to pay on options. But what's your sense? If there is a pause right now in the great BSE rally or a dip, is it a dip to buy, or do you think that it's time to step aside for now?
That's a difficult one to answer, Subhi, because they have done a commendable job and increased their market share as far as options trading is concerned. But, we're getting concerned about the overall volume in options. I think India has become the largest options trading country in the world. And, with all these daily, weekly options expiry, I don't know how long it's going to last. And end of the day, it's not really adding value to the capital market or to the investor base. In fact, we hear stories that it's the global hedge funds which are making most of the money in Indian options market. And as per SEBI study, almost 9 out of 10 traders are losing money in options. So while it is gaining market share in the options, and that is positive, but overall this particular trend is not that healthy. And valuations also are pretty stiff as far as BSE is concerned. And this market share gains also will start to plateau off, I think, over the next 2-3 quarters or so. Looking at the full picture, I think it's better to just wait out, not make any fresh bets in BSE. And maybe, if you have invested and have a large portion in BSE, you could perhaps lightening up your positions over there as well. A lot of positives have got captured in the stock price.
Okay, all right. Thanks a lot, Dipan, for joining in, giving us all that analysis. Wishing you a good day ahead. Well, let's